Today, we're going to talk about hedge funds, what they are, what they're not, and then how I would go about starting one from scratch. All right, so first, what is a hedge fund? A hedge fund falls in the alternative asset category, which means it's not the same as investing in public equities, though a hedge fund might do that. And it's not the same as investing debt, although again, a hedge fund might do that. And it's not the same as investing in, real estate, for example, although a hedge fund, you guessed it, might do that as well. Basically, at its core, a hedge fund is designed as a vehicle similar to venture capital, private equity, real estate funds, etc., where it utilizes an LP-GP structure. LPs, if you watch some of my other videos, those are limited partners, and they are basically the investors in the fund. General partners, the GPs, are those that control where those funds go and where investments are made. Within hedge funds, basically what happens is you have an investor, somebody that knows some secret way to make a ton of money, ideally, right? They've got their black box. And they go out to other investors and say, hey, invest in my fund, become LPs, and I will give you access to this secret that I have found that can generate huge returns for you, right? And that is kind of at its core what a hedge fund is. Now, hedge fund derives its name from this idea of hedging, wherein you would invest maybe in a long-term position, right? You buy the stock, and then you hedge it by short selling another piece of stock in another industry or in one that's, somewhat related or totally unrelated, depending on what your goals are. And by doing that, it allows you to, in some cases, really juice returns. So let's say, for example, you think Airbnb is the future and hotel chains are dinosaurs and are going to go out of business. And so instead of just investing in Airbnb, what if you invest in Airbnb and you short Marriott and Hilton and Hyatt, right? In that case, if your thesis proves out to be correct, you're going to generate a massive return on both the short as well as the long positions. It might also be something where you're looking to maybe make things a little more neutral. So you invest in a very cyclical industry, maybe like tourism and travel, but then you short industry like energy, which is not cyclical and is pretty consistent throughout the year. And by doing that, you're able to maximize returns while putting a floor on your downside. So a lot of different strategies. The cool thing about hedge funds is, like I said earlier, the idea is that you have this investor who has like a unique idea or secret around how they're going to invest. Now, in the past, that was all driven by like public equities investing, but that has really expanded to a lot of different categories. You're starting to see hedge funds, for example, start investing in venture rounds, right? So Tiger Global is a classic example of this. Tiger Global is one of the most successful hedge funds out there, and in recent years has become one of the most successful and largest venture and growth equity funds out there. You look at other funds like Co2, which do similar things. So hedge funds can be all different kinds of things. If you look at Steve Cohen and some of his investments, he's even gone into things like art, a bunch of different assets. But the key thing is you also have hedge funds that do stay in the public markets, but they're not really investing in the underlying performance or metrics of a company. Instead, what they're doing is they do like high frequency trading, where they watch what other larger money managers are about to do and they beat them to the punch and buy that stock first, and then the money manager buys it at a slightly higher price and then they sell, right? And they make pennies on every single transaction, but they do trillions of these transactions, and so those pennies add up really fast. So there could be lots of different ways in which you structure your hedge fund and you get some unique angle on the market. So let's say you have identified what you think is this incredible money tree, right? It's just printing money, but nobody else knows about it. And you think you've got an opportunity to tap into this and make a ton of money. And so you want to start your own hedge fund. Well, how would you go about doing it? Well, the first thing is you got to be able to prove to investors that this thing really exists. Put your own money into those types of investments. Start generating that return. Then you should be able to put your own money where your mouth is, right? Start generating those returns and be able to show those returns actually exist. Now, here's the rub. Investors, they're going to look at your track record, your portfolio, right? If it's in your personal account, they may not give you a ton of credit for it. It may be directionally helpful, and it may help you line up people that know and trust you, which is important. Don't get me wrong. But if you want to reach the pools of capital that are out there. Those that, won't just invest 10,000 or 100,000, but will throw millions or tens of millions of dollars at you. You need to start building a track record within the generally agreed framework. And that is in that LPGP structure that I mentioned before. Now, one of the ways that you can do this is through what's called a hedge fund incubator, where essentially you set up a limited partnership and a general partnership. You put all your money into the general partner, and then the general partner becomes investor in the limited partnership. That limited partnership then goes out and starts making those investments. And these types of entities can be set up very cost effectively. You're effectively setting up two LLCs, two pass-throughs. You can convert these into other entities later on with the help of an attorney, but this gets you started, where you can actually point to like, hey, here is capital sitting within this entity, and that entity went out and made these investments and generated these kinds of returns for its investors. Super important. Now, if you want to do public stocks and you have like a unique angle, say you think like, hey, I'm going to invest in everything that Nancy Pelosi invests in, right? And that's my unique angle. And I'm going to build a hedge fund all about like tracking politicians and their investments. Or, I don't know. It could be lots of different things. If you're going to invest in public equities, then you might consider using one of these social copying platforms like Collective2, eToro, Zulu Trade, or Naga Markets. Those platforms are really interesting because you can go on, you can lay out your investment strategy, you can have other people follow and mimic what you are doing, and they're making their own choices, so you're not going to get tripped up with securities laws when they're buying and selling these stocks. But what it allows you to do is show that you have this track record generating returns for other investors. And that can be another great way to start building a track record. At the end of the day, what you need is that track record, because that's what's going to convince investors to sign up. And eventually, you want to get to that point where you have enough interest in your fund that you can justify setting up a true LPGP structure. Now, a true LPGP structure is going to require that you get registered with the SEC through a Form D. It will likely require that you pass the Series 65 exam and that you set up what's called a registered investment advisor. The registered investment advisor, coupled with being registered with the SEC and having passed the Series 65 exam, allows you to go out and market your fund to investors to show them your track record and get them excited about what you're doing. It'll cost somewhere between $30,000 to $50,000 to get your docs all set up and in proper status and be fully registered. But once you have that done, your LPs, your investors, in many cases reimburse you for the cost of setting up the fund. And now you have their capital that you can go out and deploy and generate returns. The other benefit is the LPGP structure gives you the ability to charge fees on your fund and your performance. So there are two big fees. The first one is your management fee. Now, management fees range, but in general, industry standard is about 2%, which means every year you charge 2% of the total assets that you're managing as fees to cover your expenses. So your salary, your office space, your computers, the multiple monitors that you have to monitor all of your trades, whatever it might be. So if you're managing $100 million, which, seems like a lot of money, but in hedge fund world is not that big, you're generating $2 million of fee every year just to pay your expenses. Then you charge 20%. So let's say you take that $100 million and you turn it into $120 million. You're going to get 20% of the profits. So that's $20 million of profits. You're going to get 20% of that. So that's another $4 million going into your pocket. That's what makes hedge funds so exciting and so lucrative is this fee structure. But in order to get that fee structure, you have to set it up the right way with LPGP structure and registered investment advisor and registered with the SEC. So my advice there is when you feel like you're at that point, start talking to attorneys, especially attorneys that have set up multiple hedge funds in the past and know what the market is and can help you put the docs together. Simultaneously, you want to start having conversations with people and getting some interest. Now, they can't make a full commitment to your fund, but you should at least be having conversations so that when you have your docs ready, you can go out and show them the track record and start accepting commitments into the fund. Hopefully, this was a helpful tip at starting a hedge fund. For me, I would start using one of these social copying platforms. They're essentially free to start using, and you can start building your own track record as well as getting your name out there as a great investor that other investors should invest in and follow in a way that won't trip you up with the SEC. Thanks for joining. Check out some of my other videos if you're interested in starting your own venture fund, private equity fund, real estate fund. Until next time.